don't think it's because of fear of tariffs. I think it's onloading of gold. I think they understand that the world is dividing, and there's not. I mean, the gold does not reside in the United States, so I think they're onloading gold, uh, preparing for what's coming.
From what I understand, the vaults in London, I think it's like some 5,000 plus metric tons of gold they can hold, and I think they shipped out roughly about 400 tons. So there's still that question, where's the rest of it, and why the long delivery time?
Well, they may say uh, that they have 5,000 free tons, if you will, but I think those are encumbered. I think they're owned by people. I don't think they have. I don't think there's any way they could take that 5,000 tons and ship it anywhere. I think it's spoken for. So I think the number, 400. I think the last number I saw was 435 tons. I don't know what the real number is. Is it 800 tons that they could actually ship? Is it 2,000? I don't believe in any way it's 5,000 tons.
I mean, to be fair, I could be wrong with my numbers as well, but the point being, maybe none of us certainly really truly know. So there is so that a bit of uh, opaqueness, the non-transparency in the gold markets. But
Yeah,
having said
and
that, yeah,
I do want to mention, Patrick. You said, why is it taking so long? I would ask, why can they do this so quickly when back in 2013-14, if you remember, Germany requested their gold back, and it took 3 years to get 300 tons. And back then, I wrote a couple articles. I did the research and found out that uh, a 747 cargo plane can hold 95 tons. So they could have shipped that in three full plane loads and then a fourth one to finish off the rest. And obviously, it could have been done in 2 weeks, but they explained no, it's just too much weight. It's too valuable of a cargo to do in large shipments. And it took 3 years before Germany got all their gold back. However, it was not their gold originally. The gold that Germany originally deposited, it was not that same gold. They came back with different serial numbers, different earmarks. They did get ounce for ounce or ton for ton or whatever, what they had originally deposited, but it was not their gold. So then the question is, what happened to their gold? And I think the clear answer is that gold probably got leased out and was sold into the market and used as part of delivery for their capping operations. And they got called out on it. And they did make good, but they did kind of pull up their skirt and show that it was not Germany's gold that was originally deposited.
I do remember that time and how the marks, the hallmarks, they were different from the original bars that
Right.
went in, so they
Right.
received different bars. So, right, the question is, so obviously that gold did not just sit there; it went somewhere.
Yeah. The question is why. And I don't think you have to be a conspiracy freak, although most all conspiracy theories seem to have either come true or are coming true. But I don't think you have to be a conspiracy freak to ask the question why, and then your mind goes to, well, probably because that gold was gone, they didn't have it.
But with this, with what we're talking about right now, do you foresee a physical gold tightening in the market coming?
There is a physical gold market tightening already in place, and I mean you're seeing that. You're just seeing that on COMEX. You're seeing it because LBMA is having to ship metal. I mean, 400 tons. That's a lot. That's more than what COMEX delivers probably in a year's time. So there's already tightening from the standpoint of big money. I can tell you the retail demand in the United States has definitely slacked off, And we're now seeing a huge amount of sellers. And I think that's a function of the real economy has been much softer than has been reported. People have eaten into their savings, and they're liquidating gold, they're liquidating silver to survive. I think the real story, when all is said and done, is not going to be gold, but I think it's going to be silver. And I think the March delivery month is already starting to shape up where there could be huge delivery demand and potentially a failure to deliver. And I've said all along, I thought that the fuse would be silver. And once that went off, then gold would immediately go off. So I don't think there's going to be, I do believe that the deliveries will be done for February gold on the COMEX. But I think the real problem is March silver.
Okay, we'll keep an eye on that one for sure because typically guys will say when it comes to price anyway, silver follows gold, so that gold price needs to confirm, and then that silver price will follow, and demand and things like that. But you're saying this time around there we may get to that point where there's a crossover and silver will actually lead and do its own thing, probably aside from gold.
Actually, if you look back, and I mean you can look, going back to the 1980 episode, just go look back and you'll see that the reality is, because silver is such a small market, that sentiment and flows affect silver far greater than gold. And I guess the easiest way to explain that is, in a bull market, silver goes up faster than gold, and in a bear market, silver goes down faster than gold. So in my mind, the reality is that once there's a trend that has begun, silver leads, gold does not.
Okay, that's a great point because a lot of people they'll ask, like the silver to gold ratio, I think we're at about 88, 89, 90, somewhere around there, and they'll ask, why isn't silver keeping up with gold price wise?
To this point, and I mean, obviously we've had a pretty good run. To this point, silver has not kept up with gold in this particular move. But if you look at past moves, I mean, go back to, what was it, 2010, 2011, gold ran up to $1,800, $1,900, but silver ran from, I think it bottomed at $15, $17 and ran to 50. I mean, that was a triple. And then you hit the top and silver bleeds out faster than gold. So I think if you look at past events, just look at the correlation. Silver has more volatility than gold.
Something interesting last year with gold, the gold price reached 40 new record highs last year in 2024. Gold kept pushing market prices, and we didn't see those huge, large pullbacks much at all last year. So gold really held the price and it kept pushing. And I guess putting this in perspective, on average, almost every week or two, gold made new highs. So when you put it in perspective that way, what comes to mind for you?
I think just simply supply and demand. I mean, if you look at mine production, that has pretty much flatlined for both gold and silver. So the supply is not increasing. And if you go back to look at a chart, go back to, I think it was October, November of 2023, when the U.S. basically confiscated 300 billion of the Russian reserves. The following day is when gold took off. I mean, the bottom was made the day of the announcement that we were sequestering the Russian reserves. And what that did was it created demand from sovereign central banks.